What does Fed's height rates, or I'm sorry, the hiking rates mean
Rate hikes.
for us in DGen land, right? Like it feels like we're still not decoupled by any means to any of this traditional finance stuff, but what, like, in a very short amount of time, tell us what those rate hikes mean for us.
Sure. Yeah. It's obviously there's a lot there. It's hard to kind of give like an elevator pitch on it, but I think largely and broadly, um, with the new introduction of more institutional capital into the crypto space, right? Folks like Michael Saylor and your kind of corporate theme, folks like Paul Tudor Jones and your more like hedge fund types. All these people are still like very much actively looking at Bitcoin. They may have sold their positions, right? And some of them sold the top, the middle, whatever, but like these are not entrants kind of like your retail folks who bought Bitcoin at 65 and sold it at 30 and are going to kind of disappear for a few years, maybe never come back. These people all very much exist in the crypto space. I think the majority of them are still interested in it and see the potential in it as a technology and as a speculative instrument. So when that's the case, and when you have from like a dollar notional value standpoint, all of that firepower there, you kind of like awkwardly and unintentionally like are then forced to play their game a little bit. And their game, as it's been since 2008 and even beforehand, has been Fed related, right? Where the Fed with these rate hikes or more like dovish scenarios where they're cutting rates and printing money, they're controlling the spigot, right? So obviously we saw during 2020, they were printing money like crazy. Where was that money going? It was going to speculative risk assets.
Mm.
Crypto as was the golden goat of inflation hedges and speculative risk assets at the time. So it saw tons and tons of inflows, right? But the same obviously kind of negative flows on the way out. So as the Fed is kind of tightening rates here, it just makes it harder to get access to cash cheaply. So you can think of them like not only just turning off that cash spigot, but also actively trying to pull cash out of the system or trying to convince people, to pull cash out of the system. And one of the ways that happens is people sell their quote unquote like risk assets, equities, crypto, whatnot, into cash, and they pull cash out of the system. And this hopefully helps reduce inflation and all these different things. That's their goal. Um, Historically, when the Fed is raising rates because of inflation, the market in the short term gets crushed, as we've seen. But in the long term, it does tend to outperform. So I think we're kind of like middle of the road there, maybe a little bit further, where in the latest Fed meeting, they did raise rates by 75 basis points again, but their sentiment and their tone was one of basically saying if inflation ends up peaking and we don't get a 9% plus number on August 12th when the latest CPI print comes out, they will feel more comfortable reducing the interest rate hike from, say, 75 basis points or 0.75% to 50 basis points and eventually maybe 25 basis points. And that's even just that signaling from them to say
Mm-hmm.
like, hey, we think we're headed in the right direction. We think, the basically that like inflation is going to normalize. It's going to start to get to the targets we want. That's what has spurred this equity and this crypto rally because everybody's front running and saying, okay, Fed's feeling a
Yeah.
little more firm. They're not freaking out. And maybe we get a 10% CPI print on the 12th and everything dumps back down to the bottom of the range again.
Mm.
But that's at least kind of the hope of the market right now.